Good afternoon. Welcome to Green Bicep. We're going to cover housing, a recap. We're going to cover the economic cycle using the acronym of HOPE. And then we're going to cover China. So let's get to it. The economic cycle, housing, new orders, profits, and employment. 1, 2, 3, 4. It goes in that order. Housing turns first, orders weaken, profits then are missed quarterly. Stocks will go whoosh. And then you have unemployment or employment, and that drops off last. So the Fed is waiting for employment, but that's the last thing to drop. So you got to be patient in this cycle. So let's get to, let's talk about some housing. So we can see here clear as day that pending home sales year over year were down 40%. That's existing homes. Housing starts have dropped off dramatically since January of 2022. From 1.6 million down to 1.4 million. And then we also know that permits have dropped down about 20% across the United States year over year. And then on the West Coast, approximately 40%. So there's a buildup of inventory in housing. Now let's talk about orders, because we know housing is weak. So how are orders doing? Well, at the forefront, consumer credit is really shooting up. This is data going January of 2022. You can see in Q1 consumer credit dropped off, but since then it's just really skyrocketed up. This is a function of no more COVID checks. Lines of credit are much more expensive, likely tapped out. I mean, there's a lot of reasons why this could be happening, but the fact is people are using credit to continue to consume. And if we pull this out over 10 years, you can see like this is substantial. Essentially since April 2021, consumer credit just skyrocketed, and then in the last like couple months it's just straight up almost. It's quite phenomenal looking at this data. So this is credit cards and other revolving plans. So consumers are spending, but we know how. They're using credit. Now you can see when you just look at automobiles, loans have flattened out. So you're going to see auto loans are flattening, so you're going to see sales start to flatten in auto. When you look at total manufacturing, you can see we're at $556 billion of total manufacturing new orders, which is kind of flatlined since June, but a nice uptrend. So we could see weakness there. Here, this is the most important thing here. This is IMSM manufacturing of new orders. This is a survey given to executives, and they fill out data and they send it back. And it basically gives an idea quantitatively of how things are going for new orders ultimately. And right now we just broke below 50. We've been trending down for a while, and anything below 50 is contraction. That's recessionary type numbers. It's very similar to the Michigan sentiment, which is the household survey, which is very low, and NHAB that's the housing survey, which is extreme low. So sentiment is low, and sentiment always leads. It leads everything. So the market will follow sentiment, the financial markets. Then we get into durable good orders. You can see it tailing off, but trend has been up, so that looks quite positive from a relative perspective. Then you got capital good orders, and this is what was actually going into the equipment. And that's tapered off a lot since high of October, but the trend is up too. But so the bottom line is, ultimately what is happening is that people are spending money, but they're using credit to get these new orders off. Well, the executives are very pessimistic on the outlook. And so let's talk about China. Why is China important? China is important because inflation could creep in via China when they start to open their economy up, because it's locked down currently because of COVID. Millions of people locked down, and they're going to try to open it up now and through the Chinese New Year. And if they truly can open up, you're going to see commodities inflation. So copper, steel, just in general, any sort of commodities, you're likely going to see price pressure, even in oil. But oil might trade differently versus the market here in the United States. So that's a whole separate topic. So I'm showing Korea here, South Korea, because the reason why is South Korea is an exporter to China. So you can see they've been, historically, they have a trade deficit, quite significant current state. And yeah, so I'm sorry, they're just not exporting a lot currently. And so once you start to see this turn around, and I think it'll be a tell, you'll know that China is starting to pick up a little bit. I also have Indonesia. You can see here, this is Indonesia exports up 5% year over year. But you can see it's been trending down as well. So this would be a good tell to know what's happening with China. And the reason why that's important, because if China starts to pick up too heavily, we're going to have inflation. And if we start to have inflation, the Fed's going to continue to hold rates steady or raise them. If that happens, we'll continue to see this cycle play out ultimately. And so housing is weakened. Orders we saw are starting to weaken. And now next will be profits. And that's in Q1. In January and February, companies are going to be providing guidance. And if they don't think the full year is going to be what they thought it was in Q4, they're going to readjust their 4-year forecast. And that's likely going to happen. So you'll have stock prices get squished down a bit because of that. So the goal here is to protect your capital as we run through this economic cycle. And at this stage of the game, we are seeing weakness in housing, orders, profits started, and a little bit in employment. So the million-dollar question is, what is the Federal Reserve going to do in mid-year when China truly opens up? And that's where we stand currently. I'm going to provide a separate video on just hope in general, and so we could get into specifics of it, and so folks understand like why I find it to be important. Thank you if you enjoyed the video, and I'm going to provide a link to more content. Thumbs up, and I appreciate your time.